Hello and welcome in this tutorial on how to use the retail store financial model template. This model can be used for any retail store. For this particular tutorial and example, it has been adapted for a shoe store, for a shoe retail store, but it can be adapted by selecting the certain inputs to any other retail store. For example, an electronics store, a flower shop store, and pretty much anything else. So the first tab that you will see is the color coding tab, which gives you an overview of the type of cell that you will find within the model. So the input cells, meaning those that you can modify and adapt in order to fine tune the model to the specific needs of your business, are the input cell, which are colored as yellow with blue font and dotted border. Then hard code cell are cells where the value is hard coded. Those are very uncommon, and in this particular model, for example, there is none. Then output cells are the result of a formula. Link cells are cells linking to another cell, and not applicable cells are cells that you can ignore and not consider because they are not applicable to the specific scenario that you are building. So as we will see later, when you select a certain scenario, some cells are not useful anymore for your particular business, and so you can just ignore them. The second tab is the table of content tab, which gives you an idea of the content that you can find in all the tabs that you can see down here. So for example, you have the inputs tab with all the assumptions and inputs where you can make adjustments in order to fine tune the model to your specific business. The dashboard tab, where you can find metrics and charts that you can use in your business plan or pitch deck. The financial statements tab, where you can find the 3 pro forma financial statements for a period of 5 years or 60 months. So the profit and loss statement, the balance sheet, or the cash flow statement. Then the valuation tab, where we project the free cash flows from your business based on the inputs that you have selected, then bring them at present value. And this gives us an implied valuation for your business today. And then the calculations tab, which are basically where all the calculations and the mechanics of the model is taking place. And we have revenues, cost of goods sold, expenses, full-time employees, capital expenditure, and debt. So in these tabs, we calculate basically all those items, so revenue, cost of goods sold, and so on, based on the inputs that you have inserted into the input tab, and you can see the results in the outputs tab. So starting from the input tab, you can see that every tab is divided into sections. In order to expand a certain section, you just need to click on the plus button here, where you can select the different inputs. For example, the company name, the financial plan start date, fiscal year end, retail store name, opening. Retail store name is the name that we have selected here. So if I do AAA, it will change to AAA, so it's the name of your business. So let's do retail store name. When you open and the currency to be used. Then company specific information like cash starting balance, how much cash you have on hand when you start, the corporate tax rate. And then we can start with the quantity. So how much you sell, how much you actually sell. So the first assumption that we need to clarify is the days open per week. So how many days you are open every week. We make a distinction between weekdays and weekend days. So you can select that you're open, for example, 4 days during the week, and during the weekend you're open the 2 days, Saturday and Sunday. Why is this important? Because further down we make a distinction between the number of customers that enter in your shop during weekdays and during weekends. Then number of shops here. You can insert how many shops you expect to open per year. So in this case, we expect to open a second one in 2028. And then we can see that we have a red cell. So going in the color coding tab, we can see this is not applicable. Why is it not applicable in this case? Because we have selected that we start in 1st of January and we are projecting the model for a period of 60 months, so 5 years. And of course, if we start on the 1st of January, then we are exhausting the 60 months in 2028. And so no need for 2029. But if we start, for example, in June, then of course the 6 months will end in, the 60 months will end in 2029. And so in this case, the 2029 became yellow again, became an input cell, so you can actually use it. But let's move back to 1, and we can see the cell became red again. After we have done this, we can select how many customers are visiting your shop every day, so how many visitors you get, not necessarily customers that purchase, but just people that enter in your business. And again, as mentioned, we make a distinction between weekdays and weekend days, and you can set an evolution over time. So if you expect the numbers to increase over time, you can select it here. And then this is just a quick overview, an output cell that gives you an overview of how much visitors you would get per week based on the numbers that you inserted here and how many days you're working basically. Then seasonality, in this subsection, you can select which months you are open because, for example, as mentioned, this is adapted for a shoe store, but you can adapt it also to, I don't know, a store selling flowers. And so maybe in December you don't have flowers, so you select closed. And in this case, the models will know that in December you don't have revenues. Then you can select the share of customers purchasing. So out of the visitors that enter in your shop, how many end up purchasing? And this allows you, for example, to select seasonality, right? Because you can have 100% for certain months, like this, for example, meaning that all of the customers that enter every day actually make a purchase. While in other months, for example, you expect this percentage to go down, so you can select it here. And then this output sales gives you an overview of the average revenue per month that you would get during the first year, based on how many weekdays you are open, how many weekend days you are open, based on, of course, how many are available in January, for example, and how many you have selected that you are actually open, and based on the share of customers actually purchasing, and the pricing that we have inserted here and that we will see later. Then the third subsection in the quantity section is the online orders. So you might also want to sell online, and so you can select this scenario here, and whether you want to calculate the number of orders by fixed value. So in this case, you select the number of orders online per day during weekday and weekend. And again, these numbers are subject to the seasonality here. And you can select the growth rate, so how much it grows per year, and the start date, when to start. Alternatively, you can calculate it as a share of revenues. So in this case, these cells will become not applicable, and the model will tell you, okay, so we'll consider those, please input these cells. So share of orders, 10. So out of all the orders that you sell from walk-in customers that you sell physically, you have an additional 10% that you sell online, starting in May. Of course, if you don't want to sell online, you can just select, for example, share of sales and set to 0, or fixed value and set to 0 this. Then revenues, we can start with the sales price. So again, we have the categories here. You select the different categories. We will use these categories in the financial model, in the financial statements, sorry. So you select the categories of your product, like adapting this to a shoe store, for example, we have men, kids, woman, and unisex, and then the individual products, so sneaker, sandal, loafer, ballerina flats, and so on, and then selecting the category. The drop-down menu of the category depends on the categories that you have inserted here. So if I add here, for example, a new category, then I will find it here. Then you can select the sales price, so how much you expect to sell this item, how much you expect the price to grow per year, and the sales mix. So the probability of every customer entering your shop, no, sorry, not every customer entering your shop, every customer is actually purchasing, so not every visitors, but rather every customer purchasing, making an order in your shop or online, the probability of them to purchase this particular product. And of course, the sum might be higher than 100% because one customer can buy more than one product. Then we have expenses. So we have the same products that you have inserted above. You can select the average cost, so how much it costs you to purchase that item and how much you expect that cost to increase per year. Then recurring expenses, you can select recurring expenses. Again, you have the categories, and the categories that you insert here will constitute the drop-down menu that you find here. And we will use these categories in the financial statements. Then you can select the individual expense item, the expense date, so when this recurring expense starts, like marketing, bookkeeping, store rent, utilities, and so on, and whether to calculate it as a share of sales or fixed amount. And depending on what you select, so if I select here, for example, share of sales, then the model will tell me, okay, then I need a certain percentage here, while if you insert fixed amount, it will tell me, okay, then I need a fixed amount here and an expense growth rate here, so how much you expect this expense to grow every year. Then online order expenses, of course, selling online will include some expenses, like for example, fees from the platform where you are selling, like Amazon, for example. You can select the fee here as a share of revenue. Then one-time expenses like website building or store renovation. Again, you select the category, the expense date. This is one time, so it will happen only in this month. And then the expense amount. Then hiring plan. You can select the departments. The departments will include the drop-down menu here. And then the role, so shop manager, for example, shop assistant, admin assistant, and so on. The salary, start date, end date, if any. If no end date, and you plan to hire them indefinitely, then just leave it empty. Employment taxation, and how much you expect the salary to increase per year. Capital expenditure, so for example, equipment for your store, when you make the purchase, and the amount, and the depreciation schedule, so how many years you expect this equipment to last. If you expect this equipment that you purchase for 35,000 to last 15 years, and after 15 years you need to purchase it again, then you select 15 years. This helps us to distribute the expense across all the useful lifetime of that you select here in years. And then the balance sheet, meaning working capital, so inventories as a share of revenues, accounts receivable as a share of revenues, account payable as a share of cost, and then whether you expect to have an investor, so you can select the amount when they invest so that we can properly include this into the cash flow statement, this cash into the cash flow statement, and then the debt. So whether you're incurring any debt, you can select it here with the borrowed amount, remaining months, debt issuance date, debt repayment start date, so when you start repaying, and the interest rate. If you already have a debt when you are actually writing this model, then just type in the outstanding amount here, how many months are remaining, and as the debt issuance date, just insert the date of that you have here, so the financial plan start date. And as mentioned, so this model has been specifically designed for a shoe store, but you can adapt it to any retail store. Because, for example, instead of having product sneakers, you can have products, laptops, and then monitors and mouses and keyboards. If you're an electronic store, you will change the categories to electronics and then services of maintenance and stuff like that. But you just need to change the categories, the product in revenues and expenses. And basically the model will work for any retail store. Then once the inputs are done, we have the dashboards. So 3 types of dashboards: numbers only, charts, and charts and numbers. So in numbers only, you can see we have different categories, different metrics, and by expanding the different sections or everything by clicking on the 2, we can see all the results, all the numbers, right? For example, for total orders walk-in, total orders online, total orders, cost of goods sold, overall revenues by type, capital expenditure, debt, and so on. Then we can see the same, but with charts, and then the 2 combined, so charts and number. In this 3rd tab, we not only can see a yearly breakdown, but by clicking on the plus here, we can see also a monthly breakdown. So for every metric, for each metric, you can see month by month what's happening. So for COGS, we can see that in April 2024, we incur in $52,000 of cost of goods sold related to men shoes, 6,000 related to kids shoes, and 78,000 related to women shoes, for a total of 135. Then the financial statements, in the financial statements tab, you can see the 3 pro forma financial statements. Again, you can see the 3 financial statements here: profit and loss, balance sheet, and cash flow. So you can open the profit and loss, for example, and you can see revenues, total COGS, gross profit, EBITDA, EBIT, earning before interest, earning before taxes, net income, and so on. You can see a yearly breakdown and a monthly breakdown for 60 months. Then same for balance sheet with current asset, total asset, non-current asset, liabilities and equity. And then for cash flow statement with operating cash, investing cash flow, and financing cash flow, and the cash at the end of the period. And again, you can see the evolution month by month. Then on the evaluation tab, by selecting certain assumptions, like the revenue growth rate for the extrapolation period, EBIT margin for the extrapolation period, the cost of equity, and so on, we derive a certain weighted average cost of capital. And then we calculate the free cash flows. We discount the free cash flow at present value. And then by summing it, we get to an implied valuation today. And then we take this implied valuation today and we compare it to the revenue, EBITDA, and EBIT calculated by your inputs. And we have a certain implied multiples, basically, valuation multiples. And then the next tabs are calculation tabs. So in these tabs, you can see a yearly and monthly breakdown of all the different parts of revenues. So in the revenues tab, you can see number of shops, share of customer purchasing, number of sales per month, average sales price, overall revenues, online orders, orders per month, online orders revenues, and so on, and then overall revenues, cost of goods sold, same, COGS walk-in and COGS online orders, and then overall, and breakdown again yearly and monthly, same for expenses with recurring and one time, divided by the different categories, so the categories that you have inserted in the input tab, full-time employees, salaries, number of full-time employees, and the salaries by department, then CAPEX, overall CAPEX, depreciation schedule, and the residual value, and then debt. If you incur in any debt, you can see the debt issuance for each month, debt balance at the beginning of the period, debt capital repayment, debt balance at the end of the period, and interest expense for all the debts and overall.